Hi, I'm Jim Jubak, and welcome to my YouTube video for January 27th. If you like this video, please give it a thumbs up, like it. If you'd like to subscribe, please subscribe. That will get you a notification of when I put up more videos. I do about 3 a week. If you want to see more of my stuff, you can go to my free site, jubakpicks.com, that has 3 portfolios and part of what I write every day, or my paid site, jubakam.com. Which has 6 portfolios and everything I write every day. And you can find the links to all those down below. I'm feeling a little stressed today. What's stressing me out is the Fed, and that's what I'm going to talk about today. What if the Fed is wrong? Today, it looks like the Fed is absolutely 100% right. Remember, yesterday on Wednesday, the 26th, the Fed decided that it wasn't going to raise rates immediately, but strongly signaled that it was going to raise rates starting in March. And in his post-Fed meeting press conference, Jerome Powell said, hey, I can see a scenario in which we're going to raise rates at every meeting, which is one of the reasons why the stock market went down yesterday. So we're talking about not just one rate increase, but a number of them, because the real job is to fight inflation. Today, it looks like that was a good call. Now, the Fed always gets this data ahead of time, so it's not just simply that the Fed has mystical powers, it's that it sees the data. Anyway, we got the first read on fourth quarter GDP for the US economy, and the US economy grew at an annualized rate of almost 7%, 6.9% in the fourth quarter. And that really sort of validates the Fed's approach. If the economy is that strong and inflation is also running at 7%, what you ought to do is raise interest rates to bring down inflation because the economy is strong enough to stand that, no problem. What if they're wrong? What if this data point is not on a trend line that they're passing out cigars for down the road, but this is an anomaly? What if this economy really isn't as strong as this? Then the Fed is wrong, and the Fed is raising rates at exactly the wrong time. Now, there are reasons to think that the fourth quarter numbers are erroneously high, that you had consumers who had heard, my God, there's not going to be anything on the shelves, I've got to buy now. Buying early for Christmas. So you got a lot of stuff, a lot of demand pushed earlier in the period. And you had companies saying, oh my God, not going to be any chips. Oh my God, my supply chain is crazy. And you had a lot of companies stocking up on inventory during the period. And when you add inventory, you push up the growth rate. So both of those things going on, plus the fact that the Omicron variant was indeed starting to bite the economy in terms of people's jobs, but it hadn't really necessarily had its worst effects so far. So there's some possibility that the fourth quarter numbers are wrong, that they're too high. Economists, I'd note, were pretty optimistic about the quarter. They were saying 5.5% annualized growth instead of 6.9 is what we got. This is a big increase from the 2.3 annualized rate we got in the third quarter. So if you say that the Fed is looking at numbers and saying, hey, this number is where the trend line is, but the trend line is actually sort of like down here, and you've got the Fed raising interest rates, you've got stimulus coming off, so they're taking that stimulus out of the economy. You've got a lot of people sick, rates of infection are coming down, but you're still got a lot of people out of work, and a lot of states and a lot of federal government and a lot of companies don't have any particular income provision for, if you're sick, you don't get any money. So the question is, what's the economy going to look like in the first quarter of 2022 when the Fed has started to raise rates? Economists are looking forward to the whole year are saying growth is going to be about 3.9% for 2022, and that would be a really good number. That's a very strong economy. That's the scenario the Fed is looking at. So from an investor's point of view, you got 2 problems here. One is if the Fed is right to raise rates, you're looking at a situation where the Fed raises rates and raises rates and raises rates. And at some point that really bites on the stock market because rates are going up, provides some competition with stocks. So that would be a down year for stocks. If the Fed is wrong, which means that the Fed has crashed the economy or pushed it into recession by doing the wrong thing because it misinterpreted the data or misread the data or was misled by the data, then you're again looking at a down year for stocks. I don't like years where a lot of the scenarios all wind up pointing in the same direction and that direction is down. So this is a year to be very, very careful. I think we're probably going to see some kind of a bounce not too far down the road. The market is struggling to do that. I'd take some money off the table then. I think 2022 is a year to be very, very cautious. Thanks for watching. This has been Jim Jubak. Again, if you like this video, please like it, give it a thumbs up, subscribe to my YouTube channel. If you want more of my stuff, including 3 portfolios, buys and sells, go to my free site, jubakpicks.com. If you want 6 portfolios, again, buys and sells, go to my paid site, jubakam.com. You'll find links to those down below. Thanks very much for watching.